who benefits the most from stablecoins today? And are there real-world examples that you think are driving real business value ultimately for institutions or for consumers?
We do have quite a lot of clients who don't have access to banking rails or an abundance of banking rails, right? And I think this year really showed it in the events of March, where we used to think that having $2 or $3 banks or €2 or €3 banks was enough, and we quickly determined that the right number is probably somewhere in the 5 to 6 range now. But I do think that stablecoins offer an alternative to the banking system.
We have some remittance businesses as customers, and they're very much serving that B2B2C use case, where it's just more efficient for someone to use a stablecoin rail, get into crypto, move that into an emerging market, and a lot of the time the last mile payment becomes the pain. So you just switch that into stablecoin, and that local consumer is willing to receive a digital dollar versus their own local currency as well.
Despite it being a relatively small part of kind of global transaction volumes, these are, they're very real markets. But even more important is kind of the velocity at which they power the ecosystem. I think they make up roughly 70% of all of the on-chain transaction volume across the ecosystem. So very, very relevant in terms of how capital's moving.
There's this thought that, okay, what happens when a stablecoin depegs, right? So we think a lot about, from a stablecoin perspective, what's their most recent proof of reserves look like, proof of funds look like, how confident are we about the banks where they're holding the assets?
Visa recently announced it's expanding stablecoin settlement capabilities to merchant acquirers WorldPay, Nuvei. What do you think this means for the broader payment industry?
I think it opens up a lot more volume, and that stablecoins could really be used for, and it really does rubber stamp, stablecoins as a settlement mechanism and a layer to do payments.